Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: does Gusto's Solo 401k support Mega Backdoor Roth, the 2025 update? This is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. So let's get started. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's first lay the foundation with understanding Solo 401k eligibility fundamentals. What is a Solo 401k? Well, a Solo 401k is a retirement plan for self-employed persons. So the eligibility requirement is that you must be reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. So earned self-employment income, for example, could be income reported on Schedule C if your business is taxed as a sole proprietorship, or W-2 wages if your business is taxed as, say, an S Corp or a C Corp. Or if your business is taxed as a partnership, earned self-employment income would be income reported on line 14 of the K-1 that you received from the partnership. Now that we understand the basics of what a Solo 401k is, now let's talk about the Mega Backdoor Roth. So the Mega Backdoor Roth is an advanced strategy to maximize Roth contributions. For example, for 2025, via the Mega Backdoor Roth, if one has the self-employment income to justify it, you could contribute up to $70,000 or even more if you're age 50 or older, where those funds end up in a Roth Solo 401k or Roth IRA. So the mechanics require that you first make an after-tax contribution into a separate voluntary after-tax Solo 401k sub-account, and then move the funds from the voluntary after-tax Solo 401k sub-account to either a Roth Solo 401k or Roth IRA. Now, the key is that you need to have plan documents, Solo 401k plan documents, that allow for both of those steps. So the documents need to allow for, number one, voluntary after-tax contributions, and then number two, the transfer to either a Roth Solo 401k or Roth IRA. So at a minimum, in order to be able to make Mega Backdoor Roth Solo 401k contributions, you need to be eligible to set up a Solo 401k. So that's what we just talked about, how you're reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. And then number two, that you have a Solo 401k plan that allows you to make those contributions. Of course, it's also going to make sense to work with a Solo 401k provider like my Solo 401k Financial that has deep experience in helping clients through that Mega Backdoor Roth process. For example, we help clients open up the requisite number of accounts, right? A separate voluntary after-tax account, as well as a separate Roth account, helping clients understand the contribution rules. And then also, we provide the ongoing compliance support as an optional free service. So even though that first step, when you make that voluntary after-tax contribution, that doesn't need to be reported on the personal tax return or the business tax return. It doesn't need to be reported on the W-2 that you might receive, for example, if your business is taxed as an S Corp or a C Corp. So the after-tax contribution doesn't need to be reported. But the second step, when you move the funds from the voluntary after-tax account either to a Roth Solo 401k or Roth IRA, that would need to be reported on a Form 1099-R. And again, we handle that 1099-R as an optional free service for our customers. In other words, no additional charge. Now let's talk about the Gusto Solo 401k offering. Now, to be clear, Gusto is a payroll HR provider, not a 401k plan provider. But they recently announced that they are acquiring a 401k provider, specifically Guideline. So Guideline does offer a solo 401k, but their plan does not allow for the Mega Backdoor Roth. So you cannot make Mega Backdoor Roth contributions if the solo 401k plan doesn't allow it. So again, guideline solo 401k plan doesn't allow for Mega Backdoor Roth contributions. So the Gusto / guideline solo 401k, there's a critical gap there because you can't even make the contributions. You don't have a plan that supports it if you have your solo 401k plan through guideline. Now, that's why you need to have a specialized solo 401k plan, like the one offered by my solo 401k financial, because that's the foundation. Now you have the documents, the plan documents that allow you to make the voluntary after-tax contribution and then the in-plan transfer. Could either be an in-plan transfer to a Roth solo 401k or an out-of-plan transfer to a Roth IRA. So we specialize in these plans. Again, we have deep experience. We provide hands-on support through the required steps, as well as providing the mandatory 1099 reporting when you move the money from the after-tax to the Roth as an optional free service. So what's great is that we are totally neutral as far as where the accounts are at. So you can still have your payroll through Gusto, but have the plan through us. You can have a third-party specialized solo 401k plan that allows you to make the Mega Backdoor Roth contributions and, of course, still run your payroll through Gusto. Now, again, we're neutral as far as where the accounts are at. And so one of the most popular options is Fidelity. So customers will use our plan documents, but open the accounts for the solo 401k at Fidelity. Of course, Fidelity has their own solo 401k, but like the guideline plan, it doesn't allow you to make Mega Backdoor Roth contributions. Now, Fidelity is the most popular account for brokerage account option for our customers. Fidelity's number one, Schwab's number two. Fidelity has built an integration with a number of payroll providers, including Gusto. So you could open up your accounts online at Fidelity and then log in through Fidelity to your Gusto account, which would then allow you to set up a recurring transfer through Gusto to Fidelity. And we have a procedure page on our website where we go through slides and video webinar regarding how to set that integration up. So in sum, the Mega Backdoor Roth is a very powerful tool. It's a very, very powerful feature. It's one of the top reasons customers set up accounts with us, because it allows you to contribute such a high amount to a Roth account. For example, 10 times how much one could contribute to a Roth IRA, $70,000 or even more if you're age 50 or older. Gusto / guideline solo 401k plan does lack the Mega Backdoor Roth functionality. However, you could still have your payroll through Gusto and get the solo 401k plan through my solo 401k financial, so you can achieve both of your objectives and having your payroll through Gusto, but still being able to make those Mega Backdoor Roth solo 401k contributions. So that takes us to the end of the slides that we wanted to share for today. Thank you so much for checking out today's slides. We'll turn now to the questions that are being chatted up. If this information is helping you feel more confident about your future, please do take 1 second to like and subscribe. This will tell the platform that the content is valuable, which will help other solopreneurs like you find it. In addition, subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. As I mentioned at the outset, we host a daily solo 401k webinar. So that way, if you subscribe, you'll get notifications of when we go live. Now let's turn to the questions that are being chatted up. And if there are more questions, don't hesitate to chat it over so we can get to all your good questions. All right, so our first question here. If I do my employee contributions into my pre-tax bucket, can I do my employer profit sharing contributions into my Roth bucket? Or does the profit share have to go into the same bucket? That's a great question. So since the Secure Act 2.0, it is possible, if you have a plan that allows it, to make employer contributions as Roth contributions. Now, the guideline solo 401k plan, that's not going to allow you to make employer contributions as Roth contributions. Our plan does allow for employer contributions to be made as Roth contributions, but based on experience and client feedback, it's not that popular. It's actually we don't see it much at all. Why is that? Well, our plan already allows for Mega Backdoor Roth contributions. And when you make Mega Backdoor Roth contributions, as we saw in the slides, you're really first making a voluntary after-tax contribution and then transferring the funds over to the Roth Solo 401k or Roth IRA. So one can hit the maximum by making voluntary after-tax contributions with less income than one would need to be able to hit the maximum by making employer Roth contributions. And that's because the voluntary after-tax contribution limit is 100% of your self-employment compensation, dollar for dollar, up to the overall limit. Whereas the employer contribution limit is a percentage of your self-employment compensation. So for example, it's 25% of your W-2 wages if your business is taxed as an S Corp or a C Corp, or 20% of your self-employment compensation if your business is taxed as a sole proprietorship or a partnership. So that's one reason why many of our clients would just prefer to make voluntary after-tax contributions, because they don't need as much money to justify the contribution that they want to make. The other reason is just that it's much more simple from a reporting perspective. So previous to the Secure Act, employer contributions were always made as pre-tax contributions, so they were tax deductible. When the Secure Act was enacted and now allow for employer contributions to be made as Roth contributions, that created a question as far as how to report these contributions. Because if it's a Roth contribution, it didn't make sense to report it as a deductible contribution. So it was almost a year after the Secure Act was enacted that the IRS clarified that employer contributions made as Roth contributions would still be reported as deductible. So just like pre-tax employer contributions on the employer's return for the year for which the contribution is made, but reported as taxable, because again, it's a Roth contribution. So ultimately it does need to be made on an after-tax basis. So reported as taxable to the employee for the year for which the contribution was deposited. So those years could be different, because with a solo 401k, the contribution deadline is the business tax return deadline, including any timely filed extension. So we still have a lot of folks, for example, whose business might be taxed as a sole proprietorship. They filed an extension for their 2024 tax return. So they're still making 2024 contributions all the way up until October 15th. So if they made an employer contribution for 2024 as a Roth contribution, but deposited it here in 2025, it would reduce the taxable income on the employer's return for 2024, but then be taxable to the employee for 2025. In other words, the year of the deposit. So it's much more complex from a reporting perspective, because as we talked about up above, when we talked about the Mega Backdoor Roth, when you make a voluntary after-tax contribution, that doesn't need to be reported on the personal tax return or the business tax return or the W-2. It's only the subsequent transfer that needs to be reported on a Form 1099-R. Hopefully that helps. And there's some more color to your good question. Thank you so much for bringing the question. We do appreciate it. So if you use Gusto for payroll, but your solo 401k is in Fidelity, you would need to upgrade your solo 401k at Fidelity to a plan like the one that we offer. So we have many, many clients who start out with a basic plan at Fidelity and then upgrade it to our plan. So when you have a basic solo 401k plan at Fidelity, that means that the documents are provided by Fidelity and the account is at Fidelity. Fidelity's documents, like guidelines documents, don't allow for Mega Backdoor Roth contributions, but you can upgrade those documents to our documents. So It's not as if you're shutting down the solo 401k at Fidelity and then starting up a new solo 401k with us. Your plan will continue. And I think of it as a cut and paste, where those documents are cut out and replaced with our documents, which will now allow you to make the Mega Backdoor Roth contributions. Now, from an account perspective, that pre-existing account that you have through Fidelity for their basic solo 401k plan, from Fidelity's perspective, that account is still governed by their plan documents. So it doesn't allow for the Mega Backdoor Roth. So you'll still need a new account, which can be at Fidelity. So even though Fidelity offers their basic plan that doesn't allow for the Mega Backdoor Roth contributions, they will still open up accounts for third-party plans that do. And as I mentioned earlier, these accounts that you would set up at Fidelity for your plan document that you have through us now, you can link that account to Gusto to be able to enable automatic transfers through Gusto to that account. Hopefully that makes sense. Appreciate the good question. We'll give you a moment to see if any more questions come through. Again, thank you so much for the good engagement. Please like the video. Please subscribe. We also want to invite you to our community. We have the largest community of solopreneurs and solo 401k owners and participants with over 30,000 members. So that means we've got vibrant forums. We have a deep catalog of videos and webinars. So there's tons of ways to learn on the community. It's totally free. All are welcome. You can join easily at mysolo401k.net/my-community. All right, well, it looks like that takes us to the end for today. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building the community. We'll be back here tomorrow with more crucial content to help you secure your retirement.